Hi, welcome to the Market Alert for Monday, the 20th of October 2025. So precious metals pummeled to end big week. Stocks stabilised but still down post Trump trade tantrum. That's with China. Risk sentiment stabilised a little today, but there's definitely no all clear. Well, the market seemed to think it's okay given the overnight moves that we're seeing already. The wrap can't keep the bulls down. SPX and Nasdaq bounce hard off the 50-day moving average as volatility panic unwinds and tech flows hit records. So flows into the market hitting a record again. Fear got ahead of itself once again. So basically what it's saying there is that the fear of a bear market was ahead of its time. Market fear eases on bank earnings and US-China optimism. And then we move into the metals. Some interesting news items here, despite the fact that it was pummeled $3 or $4 on Friday. Royal Mint warns of silver delivery delays as prices hit record high. And here we've got silver soars to record high of 53 announces supply shortage surges across the globe. And gold mania, everyone's in. What could go wrong? Well, nothing actually, because everything else is falling apart behind the scenes. It's just not being reported. 34 billion of inflows in 10 weeks, the biggest ever. That's into ETFs, and I expect that to continue as well. So let's have a look at Friday's market action and kick off with the Dow. So in the Dow on Friday, the market trades back down, creates a triple bottom. As you can see there, market then rallies off this and is moving up on the overnight as well. So price is down initially on Friday, and then you can see that there, the buying comes in, and then we head just in the one direction. Bit of a splutter around the cash market there when it opened, but that soon sorted itself out, and now we're back at Friday's high on the overnight market. In fact, let me just go back to the economic news and just see what we've got for today. We haven't got anything, and of course with the US government still being closed, we're not getting the full release of the economic news items anyway. Also, what else have we got? We've got CPI, that's the UK tomorrow, but I think we've got CPI from the US. We have now, whether those numbers will get released on Thursday or is it Friday? Friday. We'll just have to wait and see. Maybe they've pushed them back to Friday in the hope that this situation will be resolved, but we'll have to wait and see. So that's the big one of this week, is the US CPI numbers, if they actually get released. So going back to the Dow, up on the overnight, just approaching Friday's high there. So without any economic news, the market's free to move to the upside. So in the German DAX, the market also testing 78% retracement drawn in on Friday. Got the high volume there. Market coming off this. We need to get above these two averages here. The purple line is the 5 and the blue one is the 50. And then you've got the 20 bar above this, but we need to take this out in order to rally back. And what I would be inclined to do is to go from this swing high to low and get an indication of where the market, if prices do move back to the upside, where they could find a bit of trouble there and resistance. 30-minute charts, we had a shakeout on Friday morning. The buying came in, massive buying there. Range of this bar is narrower than the previous bar, but the volume is greater, so that's buying, and it's down at the S3 level, which is what I warned about in the market alert. 90+% of the time the market will stop at this level, and then prices have come off that, and we're heading back towards Friday's high there at the moment. In the S&P 500, similar to the Dow, we've got triple bottom there. Market moving back to the upside. We need to redraw these fibs here. So let's just do that from the high down to Friday's low, and you'll see we're through the 62, 50 and 38. We just need to get through the 78 and 89. So it'll be interesting to see how the market reacts at the 89 level, but more so at this level here where we saw the selling coming in, which is just above the 78% retracement there. 30-minute chart, just like the DAX, the market sold off, but the buying came in, and then we moved off this level here, which was the low of Thursday for the S&P 30-minute chart there. You can see the low there. Got the volume, the market came in and off we went, and we're through the high of Friday already. In the UK 100, a lot of buying on Friday there, massive amount of buying. That's an interesting one. We had a lot on Thursday as well, with demand coming in, shake out the weak holders, move it back up, and now we can head back to the upside. So heading back towards the all-time highs, you will see there we've got all of these areas of potential resistance. But that's massive volume. That is for the FT100, not seeing that for a long time. So it'll be interesting to see how that pans out, unless they're trying to bring the market back before Rachel from accounts has a budget next month. We've got about 4 weeks, I think, heading into this week. So about 4 weeks, 26th of November. There's your selling, which is then switched to buying with the green. As you'll see the green there coming in. I tried to sell a bit more there, but then we'd switch the market and move back to the upside. And now we're at Friday's high for the FT100. Meanwhile, in the US dollar, it was a good day on Friday, which gave the excuse to pummel the metals as well. You can see that there, but overnight the US dollar starting to decline. But let's have a look at this pummeling and monkey hammering in the metals and have a look at silver. Kick off with silver. So no surprise really, we've had a few attempts at this, haven't we? So if we have a look at the volumes and just take these big spikes that we've seen over the last few weeks. This was on the 9th of October. The 9th of October was the day when the silver price went through $50 for the first time. So let's just go back and have a look at this. This is the 9th. You can see it there quite clearly. And you've got this huge volume. They tried to bring the market back. It failed. And then they sent the market higher. Now, on this day, they tried using 220,000 contracts times 5,000 takes you over 1 billion ounces of silver in order to do this. And it failed as the market moved higher the next day. We've got 196,000 on the 14th of October there. So let's have a look at the 14th and see what happened. So let's go and find the 14th. This looks like the 14th because the market came back off the highs. The volume's not shown quite the same on here because this is tick volume, whereas this is actually looking at the futures contract, and that would help if I actually drew it into the right one as well. It's just down there. And again, the day following this, you see the market moving higher once more. So they're doing the damnedest to try and bring this market down. And then, of course, on Friday, we've got 195,000 contracts, which is the equivalent of just under 1 billion ounces there. So 977 million ounces of silver. The mining volume per annum is 820 million ounces. So you can see, just by looking at this chart here, each time thus far they've actually tried to sell over 1 billion ounces, or they have done in the previous two. Tried on Friday again, but the market is having none of it and is moving back to the upside. So if prices manage to get back to necessarily the high of Friday, but if they manage to make some progress back to the upside, then again, it'll be a case of that they failed. I mean, when you've got the fundamentals that we've just seen in the news headlines, delays from the Royal Mint, shortages globally, and yet they managed to pummel the market on Friday. These are just last-ditch attempts of the manipulators to try and stop the price of silver from moving higher. These are classic shake out, take out the stops. If you're holding silver, I mean, what was the range on Friday? Just out of curiosity, what's the high? 54.10 down to a low of 50. Wow. So that's $20,000 per contract move. So if you are holding just one contract, you're going to have your stop close, aren't you? And of course, when you get a $4 move, which is 20,000 potential loss, then you're going to actually get taken out of the market. And that's what they do here. Then they can buy back the contracts and then start moving the market back in the same direction, because we know from this pattern, say thus far the market's failed at 220, it failed at 196, and then Friday we got 195 as well, with a $4 range as well. So it's looking quite optimistic for the silver price there. Meanwhile, gold slightly different. No shortage of gold, although people have been queuing for gold in Australia at the bullion dealers. But there was some selling around on Friday, but a lot stronger than the price action in the silver, but then silver is erratic. It's a smaller market compared to the gold market. 38 billion inflows in the last 10 days. No surprise there at all with the uncertainty geopolitically and also economically as well. So it all starting to unfold, and then banking issues also looming in the background. So gold trying to move back up there as well, but not as quickly as silver. There's your Friday slam. In fact, I didn't look at the silver one, did I? So there's your pummeling. Started there in the afternoon, just after lunch. What a surprise. Absolute crux, I'll be polite. Absolute crux. And then moving, silver's trying to move back up there. But anyway, just back to gold for that 30-minute chart sideways there. But let's have a look at the gold-silver ratio, see what it's doing. So in the gold-silver ratio on Friday, well, surprise, surprise. Like I say, gold really didn't sell off that much. Silver did. $4, on Friday. And now, of course, it's trying to recoup. So we're starting to see the gold-silver ratio. But no surprise here whatsoever. And don't be surprised if you see this many, many more times. You might even see another attempt today, given that there's no economic news around lunchtime as well. Right, let's have a look at Friday's German DAX trades. So in the morning, we kicked off with the market moving lower, as we can see there, and then we got into further lower prices down to the S2 and then down towards the S3, where the market will find support most of the time, 90+% of the time, and on this occasion the market just above it there. And then we trade sideways, and then we start to move to the upside, if I recall. We do, but it doesn't. It does hold, but unfortunately the stop is too close, and the market takes out the trade just before it then turns around and moved higher. We then get a short though, as the market moved down there, and then we move back to the upside during the mid-morning with the Dow futures, and then into the afternoon, two nice trades, which is unusual for a Friday afternoon, but the market, again, you can see the volatility there, moving to the upside as prices make their way back up to the previous day's close, before then having a sell signal and moving back down to the S2 and the 200 MA there as well for 4:30 p.m, the close of the German DAX. Meanwhile, overnight, we're sort of stuck in a sideways range at the moment, but we're heading towards Friday's high there. A bit of buying coming in the last 2 minutes or so there. No economic news today, so we'll have to see which direction we go in. Like I say, keep an eye on the, particularly the silver price. I still think it's may get another bit of a pummeling today as well, given that there's no economic news to be released. Hopefully not, but that's how I see it at the moment. Again, like I say, the positives are the fact that all of these massive volumes have so far failed to send the price much lower than in previous occasions. I can tell you now, if you'd have done 200,000 contracts before this year, then you would have seen bigger drops and continued pummeling as well of prices to the downside. Right, that's it for this one. Have a great day, and as ever, thanks for watching. See you in the next one.